Hello and welcome. I'm Jeffrey Mishlove. Today we'll be exploring empirical research using news-based indicators. My guest is Peter Hafez, who is the director of Quantitative Research for the data provider RavenPack. He has an extensive background both in the financial world and as a researcher with Sir John Cass University and Business School in London. Welcome, Peter.
Good to be here. Thank you for having me here.
It's a pleasure. And let me begin by talking a little bit about the advances that have taken place in recent years, I think it's fair to say, in the whole field of using news-based indicators. For a long time, traders have understood that the market is moved by news. It's the basis, I suppose, of the efficient market theory. To begin with, but it's only recently, in recent years, I would say, that real-time news-based sentiment indicators have been available to the trading public.
Correct. Yes, it's been around. We came out as the first company in the world with a commercial product, and we came out in the middle of 2007. Obviously, there's been some proprietary algorithms running at different sophisticated hedge funds that may have done something on their own, but it wasn't, can you say, available to the broader public before middle of 2007.
So that's 6 years or so.
Correct.
At this point, and it's had, I'm guessing it's had a huge impact and will continue to have a huge impact in the whole field of trading and investing. And you're in a unique position, as far as I can tell, because I'm not aware of any other data provider that's actually actively conducting and publishing empirical research in this area, and that's what you are doing.
Yeah, that's correct. There's a couple of companies that are trying to do this space. There's a few that kind of controls the market. We are one of them. But it's correct that we're the only company that actually publish research conducted on the data. And it's obviously one of the things that we do in order to, we believe it's important that you actually understand the data set that you're trying to sell. So we invest a lot of money in can you say, setting up an internal research capability and actually conducting the research ourselves.
Mm-hmm. Now, I am aware of a few scattered studies where independent academic researchers have worked, for example, with the Thomson Reuters news-based indicators. But they're rather isolated, and you've actually conducted extensive research, and I'd like to talk about some of your research findings. Let's look at some of the short-term findings with regard to stocks and how they respond to news. And I suppose in order to even begin that discussion, we have to talk about the particular indicators that you have that involve sentiment analysis of the news stories.
Yeah, I can definitely, we have a set of indicators that we produce at a company level or at a sector level, at market level. These can be either based on, can you say, news about companies, and obviously they are company sentiment indicators or equities-based sentiment indicators. But there's also, can you say, more recently, news analytics have moved into the space or beyond companies, and now we're able to detect places, organizations, commodities and currencies in the news as well. And based on this type of, let's call it raw data, it is also possible now to create indicators that capture sentiment more from a macro point of view. But when you look at news analytics and what it's about and how you actually go about creating these indicators, we rely on five, can you say, key attributes. One is, of course, entity detection. So it's obviously very important to understand what companies, for instance, are mentioned in the news. And it's important to do that where you're point in time sensitive. The quantitative community, before they roll out can you say, an indicator into a trading environment, they want to back test it to see how it has worked historically. And that requires some very sophisticated detection of entities, also historically. So, for instance, we need to track when companies are bought by other companies, when they may have changed names, when they got listed, et cetera, et cetera. So we have spent quite a lot of time understanding the point-in-time sensitivity of our, can you say, entity detection. The second attribute is relevance. And it's really not so much about whether it will move the stock price. It's more about whether it's really talking about, or whether it's pertinent to the companies being mentioned. So in lots of stories you will see, can you say, multiple companies being mentioned, for instance, in passing towards the end of an article. But here it's important to understand that, let's say, it's really about IBM, for instance, getting an analyst rating, and it's not so much about Goldman Sachs giving the rating. The third attribute is novelty. So here it's about how new and novel is the news, and that can you say is a very interesting filter to potentially make. For instance, if you event trade, you might want to only react on the first instance of an event, or if you aggregate information and create an indicator, you may want to place more weight towards the most recent news event rather than giving the same weight to an event that may be covered 10 times, for instance. The fourth attribute is event detection, and it's really trying to bring in more context into the news. So understanding whether the company plays a target role in an analyst recommendation, or in an earnings story, or let's say more on the macro side where a particular earthquake takes place. We currently detect about 1,200 different types of events. So you have quite a granular way of looking at the data. And then finally, you have sentiment. And here different techniques can be applied. We typically use three different types. One is, can you say, the traditional technique, which looks up positive and negative language. So looking up, can you say, a proprietary dictionary and say, good is a positive language, bad is a negative word, and that counts towards your sentiment score on the story. The second type of analytic or sentiment methodology you might use is what we call expert consensus, and it's really about having, can you say, experts read stories and rate them as being either positive or negative. And whenever you can find consensus amongst the experts, that story would go into a training set, and you would train, can you say, your algos to read news stories as can you say, as experts have done it on your training set. And finally, we have what we call market response, where you kind of look to the market and have the market being the expert, saying, how has the market reacted to particular types of news or news events or patterns in the news in the past, and then we'll apply that going forward. So you have this kind of raw set available, and that is kind of the basis for creating a set of indicators, such that you might end up having, let's say, one number per company, for instance, that you're interested in trading.
And these indicators I'm assuming, are in real time, and undoubtedly you've got processors using artificial intelligence that can process all of this, that are trained to process using the various techniques that you've described almost instantaneously, I am assuming.
Yes, we take these sources. So basically, sources can come either from professional media, where it's a subscription source, or you can also, of course, go to the broader web to get your information. But as soon as you got it, we turn it around in real time, and quicker than a blink of an eye. And we're talking something like, depending on the length of the story, anything from 50 to a couple of hundred or a bit more milliseconds of latency.
Yeah. Well, these days, in the era of high frequency trading, milliseconds, microseconds, nanoseconds become crucial for many institutions that are trying to get into the market ahead of their competition. But I find it very interesting that your research also looks at the trading opportunities that exist for people who are not prepared to invest in that kind of high speed system, but might want to get into the market at the end of the day after a news story has come out.
Yeah, there's definitely, can you say, different types of potential clients out there, and we try to cater for whomever is out there. So we have definitely, can you say, your tier one banks and hedge funds, etc. That wants this as yesterday rather than today, right? And on top of that, of course, we have those that don't necessarily have the in-house infrastructure required to really deal with the information in the high frequency space, and there we can deliver it either daily or monthly, depending on what horizon they're interested in, either as raw data such that they create their own proprietary indicators, or they could also just take the indicators out of the box that we have created and where we have applied our extensive research. And that of course can again either be captured or consumed in real time or as a daily or monthly indicator.
And as a researcher, it strikes me that what you're really looking for are how the various financial instruments involved, whether they're currencies or stocks or ETFs, whether they're going to overreact or underreact to news items, because in either case there's a trading opportunity.
Yeah, definitely. There's no doubt markets aren't efficient, so it takes some time for the market to adjust to news. Sometimes there will be an overreaction to that news, and sometimes there will be an underreaction, as you correctly pointed out. And it's the challenge is, of course, to figure out when you see one or the other. One of the other things is also that the market doesn't necessarily react the same way to a positive story or a negative story. It's really also about the context in which it occurs. And also, of course, what type of events are we talking about? So, for instance, is it an analyst recommendation, an initial analyst recommendation? So the first time a company covers a given stock, or is it can you say a stock that has already been covered and they just can you say upgrade them from a neutral to a buy, for instance? The way that the market reacts to that is very different. So you may see, can you say, an initial positive reaction to both events. But for instance, let's assume that the initial recommendation from a company or an analyst is actually in line with what you have already seen in the market. Well, you can actually see somewhat of an overreaction to that type of event, and you will see a relatively strong reversal following that, simply because the market realized, hey, there's not really a lot of new information in this, and it takes a little bit of time to realize that. And so you can see, can you say, an initial, let's call it a momentum effect, and followed by a reversal. And understanding these and the context in which news actually occurs is therefore important. And we work with different types of indicators to try to capture some of these things. So we typically work with, can you say, your sentiment indicator as well as your media attention indicator. So, for instance, it isn't, can you say, it's also important to kind of understand, does the positive or negative news occur while the company is in the media spotlight or not? And that can definitely have impact on whether you can expect over or under reactions to that news, and therefore momentum or reversal effects.